All right, so today we're going to talk about what is trading. So the concept of buying low and selling high, or vice versa, is trading. So if we look here, we can see me pull up a little trade. We can say we want to buy high and sell low, right? And so we can see here we made 1.47%. Cool. Or we can go farther back in time and zoom out, and we can say, okay, we're going to buy low somewhere down here, and we're going to aim high, right? And we're going to make our 5.66% right up here, right? This is trading. There's also real life trading. Trading doesn't always happen in the market. For instance, if you buy a rare Pokemon card, or you buy a rare car, or you buy a rare thing that you found from history, an archaeological object. Trading is simply the act of acquiring something for less and being able to sell it for profit. So, the risks of trading are many. There's inventory risk, where you can hold onto an asset and no one will sell it, right? Just like if you bought a rare Pokemon card, but if suddenly Nintendo came out and stopped trading Pokemon cards, banning it somehow, you wouldn't be able to sell it anymore, right? This can happen in the market. It's rare, but it can happen. Or you can lose by over-risking, right? And so ultimately, trading is all about a risk management game. It's a probability game. You want to buy low and sell high? Sure. Or you want to buy high and sell low? Sure. But ultimately, it's about managing these positions so that even if you are wrong and even if you do lose, you still can make money in the long run. Okay, so there's two differences that people often conflate in trading and investing. So basically the difference is short-term versus long-term. Legally speaking, in most countries, trading is holding a position less than a year. So if I enter here, short, and exit here, again, I'm taking a short trade, or wherever this trade was, down here, I enter down here and exit up here, this amount of time, we can see this is the 24th of December, and this is the 24th of December. This is within 1 day. In fact, this entire trade is only 11 hours, right? And so this is all trading. Now, if we looked at investing on the same asset, you might want to look at a much larger chart. And now, if you were to buy low and sell high, let's say you bought low down here and you sold all the way up here. This same trade, not only is it making you 675%, which is insane, but it also takes 315 days. This still isn't a year. Oh my goodness. But you get the idea, right? It's a longer time horizon. And so because you're looking at a longer time horizon, you can look at more data. And so it's very important to understand the different types of markets that you can trade within trading and investing. You can look at stocks, which are companies, Forex, which is foreign exchange, so looking at the euro versus the US dollar, or the Canadian dollar, or the British pound, or the Japanese yen. These are different currencies, and you can trade in between them, buying and selling as their economies, rise and fall. You can trade crypto, which is what we're looking at here because it's the only market open on the weekend where I'm recording. It's Sunday, which is Bitcoin. And you can buy and sell commodities like corn, soybeans, wheat, these things. And at the end of the day, all of it is the same. All of it is I am buying low and selling high, making a profit. Or maybe buying high and selling lower, making a loss. Either way, this is the basics of trading. Ultimately, people trade for profit potential. They trade to learn the skill. They trade to learn discipline. There's many reasons why people learn to trade, but at the end of the day, trading is not easy. It's the hardest way to make $1. And so if you want to continue on this journey, you have to make sure you understand the fundamentals first. You need to follow the process. All right, hope that makes sense. Ask questions in the comments.